Welcome back. You're tuned in to Closing Bell here on CNBC-TV18. Well, we've got a bit of a recovery from the day's low. We're up close to under 120 points odd. And in the last few minutes, a few stocks have moved around. So Tata Motors has seen a good recovery in today's. That chart should come up for you on the screen. Besides that, you have IndusInd Bank. Just take a look at that chart out there. The stock is moving high and moving higher very, very smoothly. Currently at the high point of the day as we speak. And throw in there a couple of other names. Bajaj Finserv, well, that was trading in the red. Now that's fought back a goodish bit. And TCS from the IT pack. You know, that was down, but just take a look at the intraday recovery. The stock is trading more or less flattish, and TCS has a relatively larger weight. In fact, it's moving to the green as well, so just keep an eye out on that stock. But Nimesh is standing by, and he's picked up an interesting note by Citi on cement stocks. Well, Nimesh, tell us, the street is buzzing around. They want to know more details. They have upgraded Ambuja Cements. Go ahead.
Oh, yes, Nigel. So it's a big report from Citigroup today, 86-page note, and they've made some big changes to the cement sector stocks as well. So the first is they've upgraded Ambuja Cement to a buy from sell, and they've raised the target price to 610 versus earlier of 340. They've downgraded JK Cement to sell now, and they've got the target price there to 2400. They've also downgraded Dalmia Bharat to neutral, and there they've got the target price to 1650. Now the top picks for Citigroup within the cement space remains ACC. There they've raised the target price to 2900. Ultratech Cement, Grasim and Nuvoco. The top sells are Shri Cement and Ramco Cement. So these are the few stock recommendations. Now coming to the sector per se, the key outline from Citigroup is one, they believe that the pricing will remain subdued despite significant scope for consolidation. They believe the nature of consolidation will be smaller players will be bought out by larger names, most likely by Adani Group, and Adani's ability to service debt at a reasonable EBITDA per ton may not encourage price hikes. So that's one bit. Second, moreover, they believe that Adani Group's ability to become the most efficient player by working out various cost levers will also mean that the focus will be on market share and not on pricing. So that's the second bit from that note. Interestingly, they've identified 84 million tons of acquirable assets, which potentially could be bought by larger players like Adani, and the names include the likes of India Cement. They have a 17 million ton capacity. Sanghi Cement, 6 million ton capacity. JK Lakshmi Cement, 14 million tons. There is Star Cement, 6 million. Heidelberg, close to 6.5 million, and Nuvoco close to 24 million. Remember, JP has already announced, selling the cement assets. It's included that name is also included in the potential list. So, and they believe this list has largely been calculated on the basis of, balance sheet strengths, maybe a bit of foreign ownership, or for that matter, the succession worries as well. So that's what the city has identified, 84 million tons. But broadly, the key changes is they've upgraded Ambuja to buy and raise the target price there, and they've downgraded two stocks, which is JK Cement and Dalmia Bharat, on the back of big consolidation happening. But they do not expect massive price hikes going forward.
Okay, all right. Interesting note. Nimesh, thanks so much for joining in and giving us that law. Everyone on the street wanted to know the rationale.